Fears of rising interest rates collided with worries about artificial intelligence spending on Wall Street on Friday, bringing an abrupt and painful end to weeks of record gains. The NASDAQ composite marked its worst day in more than a year. The losses intensified after a robust U.S. jobs report raised new worries that the Federal Reserve may need to raise rates this year to fight rising inflation. Global markets are sending a clear signal. The dollar was up 1.2% last week. That strength is hurting risk assets. Bitcoin crashed 17% to $60,959 in a sharp sell-off late in the week. Gold was down over 5% to $4,354 an ounce as investors favor the greenback. Oil, however, held firm, up 0.8% at $92.78 per barrel. The theme from last week was a strong dollar, weak gold, and crypto. The message from markets: risk is off. Now, with major assets covered, let's shift focus to the Asia-Pacific stock markets. Markets in the region ended the week mostly in the red. Japan's Nikkei bucked the trend and was the lone gainer, up 0.4%. The rest all fell. Coming to India Sensex, it dropped 0.7% to 74,243. The benchmark has struggled the most, down 12.9% from the year. Shanghai slipped 1%. Australia's ASX was the biggest loser, down 1.2%. Caution dominated regional trade. Now, in the Americas, it was brutal. Friday was brutal. Wall Street took a hard hit after record highs led by AI bets earlier in the week. But on Friday, the tech-heavy NASDAQ crashed 4.7%, the worst fall of the week. The S&P 500 lost 2.6%. Brazil's Bovespa tumbled 2.7%. Canada's held up better, down just 1%. No market in Americas escaped the sell-off. Looking across the Atlantic, Europe and Africa split this week. France bucked the trend with the stock benchmark gaining 0.4%. UK's FTSE barely moved, down about 0.4%. Germany's DAX fell 1.4%. South Africa's benchmark was the week's biggest loser, crashing 2.9%. Emerging market jitters hit Johannesburg hard.